Trading can be the most complicated thing in the world if you choose to make it so. But I'm here to tell you that you don't need to complicate anything, because in this video, I explain to you step by step the exact process that I personally use to catch high quality setups without any stress, without any complicated language, but still the same price action. And so take out your notebook and watch this video to the end, especially the trading day, because that is where you make the money. All right, so let's jump into the video. This strategy has two parts. Part one is the signal days, and then part two is the trading day. So let's start with the signal day. So what exactly is the signal day? So what I want you to imagine is, look at this price action here. And if we start from this green candle, this green candle sets a high and a low. Now, if you look at what has happened, price has cleared the high and then broken out and closed below this low. So in your head, where do you think the next candle is likely to go? The next candle is likely to go in the direction of the breakout. And this is a very important concept, because this is the concept and the backbone of the strategy. Breakouts are a strength of signal, and failed breakouts are a strength of weakness, are a sign of weakness. So what exactly is a breakout and a failed breakout? Let's look at this one. So this is the high, this is the low of this one candle. The moment price breaks and closes either above or below the high or the low, then you have strength in the market and price is likely to continue in the direction of the trend. So this one candle is your signal candle, because it tells you, all right, we have strength in the market. And then this candle here is your trading candle. So you are interested in getting in up here as price is creating the high, and then you are interested in getting out either at the close or at your desired exit. Now, let's look at a failed breakout scenario. And we'll use these two candles here. So imagine you have this candle and that candle gives you a high and a low. All right, so what do we see happens? Price breaks out this candle. You can see price at some point had broken out. In fact, let's replay it and then see what happens. So you can see price, boom, broke out and then closed back inside of the range. So this is not a breakout. Now, this is a sign of weakness, because price went higher up to that high, but then got pushed back down. So our theory is, now this is a failed breakout, and there's a very high probability that the next candle will be bearish. So what happens? And boom, you have your next candle as bearish. So we don't need to complicate anything. All we need to do is just know the high and the low, and then we wait for our signal day, which is the failed breakout, which tells us how to trade the next day. So how exactly does this look like in real life? So let's look at GJ, for example. And let's use the 15-minute time frame so that we can see the candles well. Also, if you are new to TradingView, go to settings, go to events, and then check the session breaks and click OK. You will see these lines. So these lines show you the open and the close of the daily candle. So it's very easy to identify the high and the low. And so what is our interest? Our interest is on Monday. So Monday sets our high and our low. So remember the candle that we talked about that sets the high and the low. Monday is our reference point. Now, Monday begins here and closes here. Then we look at Tuesday. We've not traded. We are just observing the daily candle. So we can just even imagine now this is one candle like that. All right. Then we come to the screen on Tuesday. Now, on Tuesday, what happens? On Tuesday, we have this small pin at the high. So a small pin is like a candle going up a little bit. And then, boom, it goes down. And so this is what we call a failed breakout. And you can see price pinned that high and then closed back inside of the range, which is a sell signal for the next day. So we know that the next day has a very high probability of continuing to go down. What happens? Boom, price goes down. So if you got in here at the high, so remember the goal on this trading day is to get in as price is going up to create a high. So once the high is created, then you get in so that it goes down with you to make profit. So as price was going up, then this was your chance to look for your entry so that as price was going down, you get out with something. And let's continue because there are some concepts that we need to understand about the failed breakout. So price breaks out. So we see price breaks out and then closes outside of the range. So up to this point, we stop trading because the moment we have a failed breakout, it can only be invalidated once price either breaks out and closes below or breaks out and closes above. But if it stays inside of the high and the low, which I'll show you in a second, it means that you continue to trade in the direction of the failed breakout. For example, so if we look at Friday, Friday broke out, then closed back inside of the range. So now we have a failed breakout. And if we look at the next day was actually a bullish day. But notice price stayed inside of the high and the low, which means that we are still continuing to look for sell opportunities. That is up until on this day now price has broken out. If this price comes back in and closes back inside of the range, then we definitely have a sell signal. But if it closes outside of the range, then it invalidates this failed breakout. And now we have to wait for another failed breakout. So basically, that's exactly what a failed breakout is. Let's use another random example. So if this is Monday. So let's start here. So Monday sets that high, Monday sets that low. Then Tuesday clears liquidity or breaks out and then closes outside of the range. All right, so that's a very, very bearish strong signal, but we don't trade that. All right, then on Wednesday, price continues to go down. All right, closes as a breakout, so nothing for us there. And then look at what happens on Thursday. Thursday breaks out, closes back inside of the range. So now we have a failed breakout, which is a buy signal. All right, so the next day we are looking for an opportunity to buy. And then price stays inside of the high and the low on Friday, which means on Monday we are looking for buy signals. And even on Tuesday, because Monday stays inside of the high and the low, on Tuesday we are looking for that buy signal. All right, so up to there, you understand the failed breakout, which is our signal. If we don't see a failed breakout, we don't trade because where is the market headed? We don't know where the market is headed. But once you see a failed breakout, we know there's a potential for a reversal, and that is what exactly we are looking for. All right, so that is the first step. Second step is the trading day. So you know where the market is headed, But how exactly do you come to the screen and actually look for a valid setup that makes you money? Some of you are struggling with trading capital, and you can use this trick to double your account size immediately. So this is my real account. You can see here, I have just deposited $74. This is the email. And I want to show you on MT5 my balance. So I have 74 USD, but my equity is 148, which is double. And this is how I've been able to stay consistent even when I'm losing, because I have double the time to come up and catch up with my losses. To access this exclusive offer, then use the link in the description. This is the biggest challenge. So we shall use GJ as our example. So Friday gives us a failed breakout, and then Monday stays inside of the high and the low. Meaning, on Tuesday, we are also looking for an opportunity to sell. So how exactly do we do this? All right, step one is come to the screen at the correct time, which means for Asia, if you're trading Asia, you come between 9 and 11 p.m. New York time. For London is between 3 and 5 a.m. New York time, and for New York is between 9 and 11 a.m. New York time. And you can change your time to New York time down here. So you just come to UTC -4, put it to New York, and you don't have to worry about time. Then after you have come to the screen at the right time, the next thing is to identify the current high and the current low of the week. So the current high and the current low is the highest point and the lowest point price has reached when you come to the screen. For example, we came to this, yes, this is the London session. You can see it's 3. Let's delete and look at it from 3. All right, so you can see that when I come to the screen, we see price has already broken out of the high of the week, which means this is now the new current high of the week. And the low of the week is down here. So once I have the current high and the current low, then now I am looking for a stop hand, which means all I need to see is price coming back to the high of the week and clearing liquidity there. Simple as that. So what does price do? Price comes and clears liquidity. So when we are looking for entries, we use the 5-minute time frame. And yeah, we use the 5-minute time frame because it's faster and gives us a higher risk to reward ratio. All right, and now this is where we start to talk about the pump and dump setup. So the pump and dump setup is very simple. We want to see an explosive move up that leaves space behind it for price to come back to later. Some people might call this an imbalance, which is okay. And then after we look for the pump, we want to be able to see the target. So if we get in, we don't want to be targeting below the low of the day. We want to target the low of the day, and that low of the day needs to give us significant return on our risk. All right. So we see price has cleared liquidity at the high. All right. So what's the next step? The next step is to identify the most recent level. And a level, so think about this. Price will always be moving. If it's an uptrend, it will create a high, a low, a high, a low, a high. For example, here, price goes, creates a high, creates this low, a high, creates this low, high, creates this low. But notice, if price comes back to that low and gets rejected, now you have a level. It's as simple as that. So if we look at how price was behaving, we have this low, we have this low, but when price came back to this specific low, what happened? Price got rejected. And so now we have a level. And the theory is, if we break below our level and close below it, that's your entry. And then you put your stop loss above the breakout candle. And then you are targeting the low of the day. So notice, this is now the pump and dump setup. We have the pump, we have the pause, we have the stop hunt, and then boom, we are waiting for price to start dumping. And what happens? Price dumps all the way, all the way. So this is the setup that we want to see. Now, let me tell you something. Understanding how your setup needs to play out will help you stay calm even when you see all these ups and downs. Here's the thing. If you get in and price just goes against you, you're wrong. And so anything above the breakout candle, I'm wrong and I'm ready to get out. So that's my first exit. Second exit is, say for example, this trade takes too long. I can exit at the end of the day, which is at around 5 p.m. New York time. So if once 5 p.m. reaches, I close all my positions regardless of how much I've made. And then my last exit is take profit. So right now I have 3 major exits. Stop loss, take profit, and at the end of the day. So also I don't try to manage the trade that much. Once I get in, stop loss, TP, set and forget, move on. So basically, this is exactly the simplest strategy in the world. It's as simple as that, nothing really complicated. If you resonate with this strategy and you would like to work one-on-one with me, then I have an irresistible offer for you. Link will be in the description. And also, if you're not in our school community, then access the free course on the free school community. Link will be in the description. And if you got value from today's video, subscribe and I will see you in the next video. Peace out.